Hello, everybody. This is Brent Foster with the Northbound Wealth Podcast, and this is your weekly market insights. Stocks rise modestly over short trading week. That is the headline. Today is June 24th, 2024. Thanks for listening. Stocks edged higher over the 4 trading days last week, with 3 major averages taking turns leading based on various economic and artificial intelligence AI news. The Dow Jones Industrial Average rose 1.45%, its best week since May, while the S&P 500 gained 0.61%. The Nasdaq Composite, which has led all year, ended flat. The MSCI EFA index, tracking developed overseas stock markets, rose 0.94% for the week through Thursday's close. Well, mixed economic news. All 3 averages began the week with gains, including new highs for the S&P 500. However, stocks posted only modest gains on Tuesday as mixed economic data came in. Retail sales rose 0.1%, less than expected, although better than in April when sales fell. Markets were closed for the Juneteenth holiday on Wednesday. As the week ended, it was the Dow's turn to lead as sentiment shifted on mega-cap tech names as investors again questioned the sustainability of AI market drivers. Home prices hit a new high in May. This, paired with high mortgage rates, caused existing home sales to fall for the 3rd consecutive month. And on my blog, I've got Y charts. I'm going to go over those. Dow Jones Industrial Average year to date is up 4.83%. MSCI EFA index is up 6.30% for the year. Nasdaq Composite is up 18.48% for the year, and the S&P 500 is up 15.53% for the year. The 10-year Treasury note is trading around 4.25% on the yield. That's down from a month ago of 4.44%. And then 3 months ago, we're at 4.27%, and 1 year ago the 10-year was at 3.74. So up from the 1 year ago number, but down from the 1 month, and just about even with the 3-month number. We'll watch that as yields go up. If they do start to cycle back up, we pay attention to when they get to around 5. Okay, then we might have a sell-off in the equity markets, and then we'll see the 10-year note back up. At least that's what's historically been happening. So a notable AI driver. So some investors and market analysts are examining the underlying long-term drivers of AI more closely, given its outsized impact on market averages like the S&P 500 and the Nasdaq. One such underlying driver is DRAM, D-R-A-M, Dynamic Random Access Memory, the AI turbocharged version of a RAM semiconductor, more commonly referred to as memory chips. Companies making DRAM chips are an essential part of the AI ecosystem. Expect attention to shift to prominent DRAM players as they report earnings in the second quarter of this year. This week, key economic data. Tuesday, consumer confidence, Case-Shiller Home Price Index. Wednesday, new home sales. Thursday, gross domestic product, jobless claims, durable good orders, international trade in goods. Friday, personal income and outlays, and consumer sentiment. This week, notable companies reporting earnings. Tuesday, FedEx and Carnival Corporation. Wednesday, Micron Technology, Paychex, and General Mills. Thursday, Nike, McCormick, Walgreens, Boots Alliance. And tax tip for the week. Who can deduct car expenses on their tax returns? Can you deduct expenses such as gas, depreciation, and lease payments on your tax returns? If you're a business owner or self-employed individual, you may be able to. If you use your car for business and personal purposes, you may split the expenses and base the deductions on a portion of the mileage used for the business. There are 2 methods to calculate the car expenses you can deduct. First method involves calculating and deducting expenses, including depreciation, lease payments, gas and oil, tires, repairs and tune-ups, insurance and registration fees. The second entails using the standard mileage rate, which is a rate calculated to represent gas and some of the above factors that I already mentioned. In the 2021, the standard mileage rate is 56 cents per mile. Taxpayers who want to use the standard mileage rate for a car they own must use this method in the first year the vehicle is available for the use in their business. And again, this information not intended to be a substitute for specific individualized tax advice. We suggest that you discuss your specific tax issues with a qualified tax professional. And this tip was adapted from irs.gov. Stay tuned for the next segment. We've got a good show for you. Can you believe that we're already halfway through the year of 2024? It's crazy, isn't it? Now is the perfect time to review and reassess your finances to ensure you're on track to pursue your goals. There's certainly a lot to take into consideration. What are your top concerns? Rank your top 3 out of these 6. Number 1, having enough saved for the retirement you envisioned. Number 2, caring for aging parents. Number 3, considering all factors when positioning your investments. So basically investment strategy. Number 4, managing healthcare costs. Number 5, legacy and estate strategies. And number 6, career goals or possible career transition. A mid-year financial review is an excellent opportunity to do some of the following. Assess your progress towards your goals, stress test your investment strategy, check in on your insurance coverage, review your estate and revisit your beneficiaries, and update your approach to reflect any new goals you now have. So take time to review, reflect, and realign your strategy so that you can finish 2024 very, very, very well as beyond, the years beyond that. You can reach out to us if you have any questions, 317-399-1107. Stay tuned for the next segment. During your financial journey, attempting to avoid common IRA mistakes can help as you pursue your goals. Let's dive in. Number 1, not keeping up with new RMD rules. Required minimum distributions are how the IRS collects taxes from tax-deferred retirement plans. Before 2019, RMDs began in the year you turned 70 and a half. In 2019, the Secure Act raised the RMD age to 72. And the Secure Act 2.0 raised the RMD age to 73. And by 2033, age 75. Remember, withdrawals from traditional IRAs are taxed as ordinary income and, if taken before the age of 59 and a half, may be subject to a 10% federal income tax penalty. Number 2, not seeking guidance on new inherited IRA rules. Another provision of the Secure Act includes a new 10-year distribution period, effectively eliminating the quote-unquote stretch IRA strategy, which allows beneficiaries to take distributions over their lifetime. There are some exceptions, but the new rule has prompted some to review their estate strategy. Number 3, maintaining multiple traditional IRAs and rollover accounts. If you've had multiple IRAs, the IRS treats them as a single IRA under the quote-unquote aggregation rule. When computations for taxes or distributions are made, the combined value of all of your traditional IRA accounts has to be considered. Keeping track of them is critical. We're on this journey together. If you'd like to review your retirement strategy, do not hesitate to contact us at Northbound Wealth Management, 317-399-1107. Go to our website, www.northboundwealth.com. Stay tuned for the next segment. Hey everyone, just a heads up, students, parents, the clock is ticking towards the FAFSA deadline for the 2023-2024 awards year. You have until 9:59 p.m. Pacific time on June 30th, 2024 to complete your free application for federal student aid or FAFSA. Keep in mind, if you need to make any corrections or updates, they must be submitted by September 14th, 2024. Don't forget that many states and colleges have earlier financial aid deadlines. Consider submitting your FAFSA as soon as you can so that you can take advantage of any opportunities. And stay tuned for the next and final segment. Hey everybody, this is June 26th, 2024, and I'm getting this out in this week's Northbound Wealth Weekly Market Insights podcast. And what I wanted to talk about was the Dow, the S&P, and the NASDAQ as far as its technicals, as well as some indicators that I tend to follow in the markets. And I'm going to jump over there now. So I tend to like to look at a few indicators just to give me an idea as to where the market is at and where it's headed. I look at the NYSI, which is the New York Stock Exchange. It's $NYSI, McClellan Summation Index ratio adjusted. It's got the EOD on there as well. Full stochastics and volume and all kinds of fancy terminology. But basically what I've done is I've looked at a 1 year daily candlesticks on that. And I'm looking at the oscillator full stochastics being down below 20 the last 2.5 weeks or so. So we've seen weakening internals inside the market happening ahead of price action. Price action continues to hang in there and stay strong, gradually going higher. And on one of my indicators, it's actually indicating that we're in a bit of a weakening cycle inside the NYSE. And then I look at my other indicator, which is just 4 years. So I zoom out on the New York Stock Exchange McClellan Summation Index ratio adjusted. Just zoom out a little bit. And the data on this chart and the previous one I just mentioned is June 25th, 2024. I'm looking at also below 20 readings on both of those full stochastics, as well as price action seemingly starting to kind of tip over a little bit and might be marking a top. It looks like NVIDIA stock kind of topped out a little bit. Looks like it'd be kind of nice to get a consolidation. I talked about this last week. It'd be nice to get a correction or a consolidation where we kind of either trade sideways in choppy markets and allow time to go by. I'm glad to see the market taking a breather. It's been good. Hopefully we see some also broadening out in the equity markets away from the Mag 7 and the top companies in the S&P to maybe broadening out a little bit, where we see maybe a bit of a rotation out of technology stocks and into some of the greater economy, which actually will be helpful for the S&P 500 and the NASDAQ and the New York Stock Exchange, as well as the Dow, and also benefit portfolios. So it'll be interesting to watch over the next couple of weeks if that actually plays out. And then we get to move higher after maybe, on average, about 4 to 8 weeks of consolidation. So we'll see how we do by the end of August, July, through the month of July. And then in the month of August, people are starting, I think, portfolio managers and traders are starting to look actually to 2025 earnings as well, and also focusing on the election. So we've had an increase in the VIX, and it's not like a pronounced increase. I mean, the VIX is only trading at 12.64 at the moment, but we're just seeing some internal indicators showing that we might get a bit of a consolidation. If you have cash on the sidelines, it might be a good buying opportunity, but let your financial advisor know or be looking at that and asking the right questions to understand where your portfolios are going if they line up with your objectives, goals, and risk. All right. Thank you for listening to this segment of the Northbound Wealth Podcast, weekly market insights with your host, Brent Foster, signing off. Have a great weekend and rest of your week. Take care. We'll talk to you soon. Bye-bye. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, and tax advice or as a solicitation to offer or buy any securities. Clients of Northbound Wealth Management may maintain positions in the securities discussed in this podcast.